You have been reading candles since the day you opened your first chart. Open high, low close, bodies, wigs, pattern. You learned every name, memorized every rule, applied every pattern exactly the way you were taught. And you still cannot consistently explain why a candle that looked like reversal continued, why a candle that looked like continuation reversed, why the same pattern at what looked like the same level produced two completely different outcomes. That is not a pattern problem. That is a perception problem. A candle is not a record. It is a crime scene. And every trader who does not understand that is arriving after the evidence has already been cleaned up. By the end of this video, you will understand what happens before a candle is born. Not what it looks like, not what pattern it forms, not what the textbook says it predicts, but why it is shaped exactly the way it is. And once you understand that, you will never read price the same way again. Stay with me. This is not a candlestick pattern video. I am not going to show you a list of formations and tell you what each one predicts. What I'm going to show you is the institutional logic that determines every week and every body before you ever open your chart. Because the candle is not the story. The candle is what remains after the story is already over. That is a perception video. And perception, once changed, cannot be unchanged. I did not learn this from a course. I learned it from thousands of hours on a live chart, watching price move, getting it wrong, pulling the chart back, and asking one question every single time. Not why did the indicator fail? Why did price needs to go exactly there at exactly that movement? The answer was always the same, and once I found it, the candle stopped being a data point. It becomes a confession. Here is exactly how most readers read a candle: open, high, low, close. They see a body, they see a wig, they name the pattern: shooting star, reversal engulfing, continuation, doji, indecision, and they make a decision. That is not reading a candle. That is a reading a summary and treating it like the full story. The open, high, low, close are the final numbers. They tell you nothing about how price got there, nothing about who moved it, nothing about why the candle is stopped the way it is. Here is the behavioral reality. The trader sees the shooting star, they enter short, they feel confident. The pattern is clear, price pulls back slightly, they hold, then price pushes higher, throw the wick, throw the entry, throw the stop, and the trader opens a new chart and looks for the next shooting star. That cycle, see the pattern, name it, trade it, lose it, repeat, is not a strategy problem. It is a reading problem. You are a detective who reads only the last line of the police report and calls it solved. The crime happened before you arrived. The candle is just what was left behind. I remember one specific trade. Clear uptrend, shooting star formed at a period high. Textbook. I entered short immediately because the pattern said 2. Price pulled back 2 candles. I held. The pattern was still valid. Then it pushes through. My stop was gone. I sat there watching price continue in the exact direction I had just sold against. I went back to the chart an hour later and looked at the candle differently. Not what it looked like, but where it formed. What the wick actually did, where the body closed relative to the full range, everything was there. The candle had told me the complete opposite of what the pattern name suggested. I just did not know. That was the last time I ever named a pattern. Here is the belief sitting underneath every misread candle, that a candle shows you what the market did. It doesn't. A candle shows you what the market wanted you to see after it had already done what it needed to do. Retail traders need to read the candle, operators read the intention behind the candle. Those are not the same reading. They produce completely different decision. The wick above you, that was not price running up and failing. That was price being sent up on a purpose to collect the order sitting above last swing high, to create the conditions for the real move before the real move could begin. The body, that is not just momentum. That is the result of one sided absorbing the other completely before the dominant participant stepping in with size. Every candle is a negotiation, and retail trader did the handshake, not the conversation that happened before it. In a moment, I'm going to walk you through the 5 stages of a candle's life. 5 things that happened before and during every candle's formation that determines its shape before most traders even open their chart. But first you need to understand the one foundational mechanic that makes every stage every sense, because without it this sequence won't fully land. Foundation: why the shape exists. Why does a candle look the way it does? Because the entries with enough size to move price cannot enter randomly. An order worth hundreds of millions move price against the position before it is even fully filled. So they create the condition. They need traders positioned incorrectly. Stop that need to be triggered, providing the liquidity their order requires. So they push price into areas where retail orders are concentrated, trigger those stops, absorb the other side, and once positioned, they let price move. A candle is the residue of that process. Every wick, every body, every gap is the footprint of someone who needed something from the market and got it. That is not theory. That is why every candle is shaped the way it is. Stage 1: the scan. Notice here, price moves up before it moves down. That upper wick, most traders see rejection. They mark it bearish and move on. Look closer, price did not go up by accident. It went up because there were orders sitting above that swing high. Stops from traders who were short, buy orders from traders waiting for breakout confirmation. Price went there, collected what was needed, and returned. A wick is not failed momentum. A wick is a recipe. When you see wick, the question is never what does the pattern mean. The question is what was sitting there. Stage 2: the close. Watch where this candle closes. Not at the high, not at the low, somewhere specific. The close of a candle is not random. Price closes where it closes before that level is meaningful to the entity controlling the move. It closes near value at a level that will attract the next wave of participation, or it closes in a way that traps the last group who entered late, leaving them underwater, providing liquidity for the next move. This candle closes in the trap third of its range. Sellers entered during this candle. They were absorbed. Buyers held control through the close. That close is not a coincidence. It is a statement exactly where the dominant participants choose to end the negotiation. Stage 3: the body tells you who won the negotiation in that period. A large body, one side absorbed, the other completely. A small body, neither side could dominate. But here is what most traders miss. The size of the body matters less than where the body sits within the full range. Look at the candle, long lower wick, body closes near the top. Most traders call this bullish. They are right, but they do not know why they are right. The lower wick tells you sellers entered hard. Price was pushed down aggressively, and then buyers absorbed every seller completely and dropped price back to close near the high. The wick below is not weakness. It is the proof of strength. The sellers came, they lost. The body is the confession. Stage 4. Notice the gap here. Between this candle's close and the next candle's open, price moved through this zone so aggressively, so quickly that one side of the market never got a fair chance to transact. That is unfinished business, and it will be revisited, not always immediately, sometimes sessions later, sometimes weeks later. But watch, price returns here, enters the gap, finds the order left behind, and continues. The market is a continuous negotiation. Unfinished business always get finished. When you see clean aggressive movement on your chart, mark the gap it leaves. That gap is on the market's to-do list. Stage 5. This is the stage most traders never see, and the most important one. Look at the candle. Upper wick, bullish close. Most traders read buyers in control. Now look at the context. Price swept the high from their sessions ago before closing bullish. That upper wick was not buyers pushing price up. That was price being sent up to collect every stop sitting above that level, to fill the order participants who needed to go long against the retail traders chasing the breakout. The breakout traders entered long right as the real positioning was being built against them. Their entry was the liquidity. Once those orders were filled, price returned. The real move began. The wick was the trap. The body is the truth. Now I am going to show you how this looks on a real chart. One sequence, 5 candles, the complete story told from first stage to final move. This is where everything we just covered stops being a concept and becomes a read. Watch this chart. 5 candles, one complete institutional sequence, candle 1 clean bullish, body closing in the top third of its stage. Buyers in control, no significant wick, Nothing interesting yet. Candle 2, price pushes higher, close is mid-range. The negotiation is tightening. Neither side dominated completely. Candle 3, aggressive push upward. Upper wick sweeps the prior session high. Body closes back inside the range. Most traders see a shooting star, reversal signal, and enter short. Look at what actually happened. Price went above the level, collecting the stops, sitting there and returned. The wick is the receipt. Candle 4. Small body mid-range close. Consolidation. The participant who collected above is now positioning candle 5. Large bullish candles closing in the top third of its range, leaving a gap below it. The real move begins. The entire sequence was visible. Every stage was there. The trader who named the pattern on candle 3 is short. The operator who read the stages is long. Every wick is a lie told on purpose. Every body is a confession. You have been reading what the candle said. You have never asked why the candle was chopped that way in the first place. That question is the difference between a trader who named patterns and an operator who reads intention. The patterns tells you what happened, the intentions tells you why it had to happen and what come next. 3 questions. Read every candle that matters with these 3 in this order. Question 1. Where did this candle form? Context first. Always in this candle, forming at a premium, above value, at a discount, below value, near a liquidity concentration, inside an unfinished gap. The location of the candle determines everything about what the candle means. The same shooting star at a premium and the same shooting star at a discount are not the same candle. Location is not context, location is meaning. Question 2. Question 2. What did the wick do? Where did price go before it closed? Did the wick sweep a prior high? Did it reach into a gap? Did I tag a level that had been untouched? The wick tells you what price was looking for, not where price failed, but what price needed before it was ready to close where it closed. Question 3. Where did the body close relative to the full range? Top 30% price absorbed sellers, buyers held control through the close. Bottom 30% buyers were observed, sellers hold. Middle of the range, the negotiation is unfinished. Do not force a read. Wait. No pattern name, no indicator, no memorized rule. Just those 3 questions applied in sequence on every candle that matters. The candle will tell you everything if you ask the right question. 3 mistakes I have watched traders make, all 3, and I made all 3 myself. Mistake 1. Reading the candle without the location or doji at a significant area is information. A doji in the middle of a range is noise. The same shape, completely different meaning. Location determines meaning. Always check where before you check what. Skipping location is not a shortcut. It is the reason the pattern fails you every time. Mistake 2. Treating the wick as the full story. The wick is not the story. The wick is one line in the story. The body, the location, the context, those completed. A long wick without context tells you nothing. A long wick that swept a prior high at a premium after 3 sessions of consolidation tells you everything. Context is not optional. Context is the read. Traders who isolate the wick from its context are making a decision with half the information. Mistake 3. Naming the pattern instead of reading the candle. The moment you say shooting star, you have stopped thinking. You have handed your read to a memorized rule that does not know the context, the location, or what the wick actually collected. Pattern names are shortcut, and shortcuts in this market gets you stopped out. Operators do not name patterns, they read conditions, and conditions are never the same twice. Here is your challenge. Go to your chart, find the last 5 candles before a significant move, one you either missed or got wrong. Do not look at the pattern name. Ask 3 questions for each candle. Where did it form? What did the wick collect? Where did the body close relative to the full range? 1 sentence per candle. Not a prediction, a reading. 5 candles. 5 sentences. Tell me in the comments what you found that you did not expect, because at least one of those candles will show you something that was visible to the entire time. You did not have the question to see it. A candle is not a data point. It is a record of a negotiation between participants with different intention, different information and different size. The wick is what they needed the market to see. The body is what actually happened. In the next video, we take this foundation and apply it to market structure. How individual candles build into the larger institutional narrative that determines where price is actually going. If this video change how you read a single candle, that one will change how you read an entire chart. Subscribe so you don't miss it.